Please welcome to the stage our next session's moderator, Johnny Wrench, Executive Director, Tokenized Asset Coalition, joined by today's panel, Mazen Eljundi, Global Head of Crypto, Wealth and Trading, and Expansion Markets at Revolut, Jonathan John O. Steinberg, Founder and CEO of Wisdom Tree, and Raj Damodran, EVP, Blockchain and Digital Assets at MasterCard.
Welcome everyone. Can you guys hear me? Yeah, I think so. I'm Johnny Wrench. I'm the Executive Director of the Tokenized Asset Coalition, and welcome to our panel where we're going to discuss the stablecoin's role in the future of banking and institutional adoption. I've been in this industry long enough to remember when stablecoins were not crypto enough for the crypto industry, and were too crypto for fintech. So it's nice to see everybody combine forces with this holistic rebrand that we're currently doing as being stablecoins. Maybe we'll take down some of the VC dollars going into AI, who knows. But if you'll recall, stablecoins got their start as an institutional product. It was liquidity for trading. And our goal with this panel is to differentiate from that use case and talk about banking. So banking services including how people pay, store value, generate wealth, and obtain financing. And to discuss these topics with me, we've got an incredible cast. I'll let them do their own intros, but we've got MasterCard that does about $10 trillion of actual payments in commerce annually. Wisdom Tree with 120 billion of AUM, providing investment products, both crypto natively and otherwise. We've got Revolut that provides digital banking services for a global user base. And we've got an OG in the space that's been enabling institutions to be in crypto since 2014 when Mt. Gox crashed, Chainalysis. The panel structure is very simple. We'll do some intros. We'll talk about the value prop for why adopting stablecoins. We'll go through some challenges that these folks have seen and they're facing. We'll talk about the revenue model and the actual business of running a stablecoin and how that looks over time. Then we'll look into the future. Then if you're lucky and you stick around, we've got a little bit of alpha for you and some announcements. So with that, why don't we go down the line? Why don't you kick us off with an intro?
Thank you. My name is Mazen Eljundi, but you can call me Maz. I've been with Revolut for 3.5 years. I help the company in several areas, one of which is helping lead the crypto business. Some of you may have heard of Revolut, but for those who haven't, a quick intro. Revolut is an international fintech and a licensed European bank. We now serve more than 55 million customers globally across 38 countries, spanning 5 continents. Last year, we hit a major milestone in our company's journey, which we're all very proud of. We successfully secured a $45 billion valuation, cementing us as the most valuable technology company in all of Europe, and one of the most valuable private companies in the world. Our approach to crypto is very progressive relative to our peers. And crypto is a core part of our vision of banking without borders. And we work closely with our industry partners, and we learn a lot from them as well. So Johnny, thank you for having me, and I look forward to this discussion.
Let's go. Jono.
Jono Steinberg. I'm the founder and CEO of Wisdom Tree, New York Stock Exchange listed asset manager. We manage about 120 billion, mostly in ETPs or exchange traded funds. We have crypto exchange traded products. We've also been leaning very aggressively into tokenization. We have about 13 exposures tokenized, treasuries, equities, gold, the dollar, a money market fund. We've got about 250 million in our tokenized funds, and within stablecoins, we have 2 stablecoins, the money market fund and the dollar. But for us, it's very important to interact with the stablecoin as on-ramps and off-ramps, as well as interface with them as maybe a reserve solution for them. So very happy to be here. Thank you.
Amazing. Thank you. Raj.
Great to be here. Raj Damodran. I head up the digital assets blockchain business for MasterCard. Just as you introed, yes, we did process 10 trillion or so. Almost all of it actually is in fiat, right? So today, at the core of driving all of that business, it's cards and cross-border business and so forth. All of it there are a couple of core principles that drive what we do in this space as well. The first one is just can we provide choice to our ecosystem partners in meeting where they are, what kind of currencies they want to support. We clear and settle dozens of currencies and support a number of transaction currencies around the world. So how do we continue to provide the choice as many people want to deal in stablecoins? So that drives one. Second, can we do that in a very simple, continue to do that in a very simple consumer experience with highly trusted experience? That drive it. So as a result, we have a couple of things, and we can unpack that later. Cards provide access to anyone who has the stablecoins today. We have a number of cards all the way from exchanges. We talked about OKX and the likes of Kraken and so forth, all the way to kind of self-custody wallets, MetaMask, and cards linked to that. So that's one range. And second is many of people talk about remittances, and we have a product to make remittance very trustworthy and very simple to do with just email and mobile, among other things that we do in stablecoins, which we can unpack later.
Amazing.
And I'm Jonathan, CEO and co-founder of Chainalysis. We've been providing investigation software, compliance software for 10 years in the crypto space, powering the largest enterprises and the smallest builders to keep everyone out of trouble. We've recently also moved into actually the prevention space, so helping secure smart contracts that people are using, particularly important for stablecoins, particularly important as stablecoins bridge across different chains and become more interoperable. And then also in the fraud prevention space, and looking across all types of real-time payment systems to make sure that we can actually help prevent scammers from stealing money from people who are trying to just pay and go about their daily lives. And so very excited about the stablecoin opportunity, and want to get into the discussion.
Amazing. I think before we jump in, I would love to hear just a personal, when you had your first interactions with stablecoins. I'll start us off, but I actually passed on investing in Tether way back when in their angel round, so kicked myself for that one. But I grew up in crypto through Bitcoin maxis, and when I saw the deck, I was like, "There's no way this is going to work." Anyone else have a story?
I'm just surprised there was a deck.
There was a deck.
Yeah, for us, it's about really a lot of what we do is customer driven. When we started working with many of the crypto exchanges, their daily business is conducted in stables, right? So it's they would like to pay their business partners in stables, deal with everyday payments in stables, and that it's really one of the things we do. For example, is people can settle with us in stable coins, right? So that's one of the earliest use cases and continues to be a use case today. Yeah.
Amazing.
Sort of for us, it was a natural, we're in the business of transparent exposures, and as we're tokenizing, it gave us an opportunity to pay out interest and dividends from our exposures in our own stablecoin to diversify our revenue, business, just a natural, and it's just, the first real world use case on chain beyond Bitcoin. So it's just seemed like a natural for us to at least be in the game and to try to exploit it.
Was your question personal or at the company level?
I am curious about the personal.
I'll give you a personal one.
Yeah.
Somewhere back in 2018, I was playing in DeFi land, and a lot of degen investments, and then I realized crypto was going up and going down, and I needed to pull out, and the safest place to pull out that crypto into a more stable asset class was the stablecoin. So that was a way to park the money until I was ready to jump back into other cryptos. That's how I got introduced to stablecoins.
Yeah, I mean, similar story. One day you had USDC available on Coinbase the day before it wasn't there.
Right.
Yeah. Let's move on slightly. I'm curious, so from the standpoint of your guys' businesses, what are the actual value drivers of adopting stablecoins? And I kind of view this, there's above the line, so revenue generating, AUM expansion, and then there's below the line operational, and maybe there's sort of like customer stickiness and whatnot. I'm curious about those value drivers for your guys' businesses. Who wants to kick us off?
Yeah, so at Chainalysis, we have two sides of our business. We have a public sector side of the business where we provide investigation software and monitoring software for government agencies around the world. We serve over 330 government agencies across 60 plus countries, and those agencies have been asking us about stablecoins from the very beginning, and so they were actually some of our first customers to ask us about what's happening in stablecoins. The business that we're in is providing compliance services to all of the biggest venues across the ecosystem, and so when those venues were first adopting stablecoins for settlement, they were screening transactions against us to be able to check how the security and compliance of those payments.
And venue, you mean like a Coinbase,
a Coinbase,
yeah, okay.
a Kraken, those types of places. And what I think has been really interesting to see is that as stablecoins have become more than a trading settlement mechanism, as we've moved more into payments, obviously now stablecoins occupy something between like 60 and 70% of blockchain transactions out there. And as someone in a transaction-driven business, we have to be across those transactions, and so that's something that we see as an opportunity. And obviously, the model and purpose of those transactions is now very different. And so, finding the right commercial model, finding the right solutions, finding the right SLAs of how you have to deliver that service is very different in a stablecoin context than it is on blockchain rails that are much slower.
For sure.
Yeah, look, we talked about the choice on the card side that is a definite value, both on the issuing side and as well as on the merchant side. Merchants wants to get paid in stable coins, and therefore acquirers want to get paid in stable coins. So that kind of continues to be a use case. But broadly speaking, you talked just about how it is branching out from trading into transfers. End of the day, transfers of the value is between people or between businesses, and that often, many of these cases across geographies, and end of the day, such a payment only can happen when the experience is simple, and it can be a highly compliant, comparable transaction to what happens in the real world. And we do that role today, not just in cards. If you look at, we've masked all the complexity, and you go just tap to enter a metro, for example. That's the simplicity of the experience. Multiple currencies, multiple technologies, all abstracted behind the scenes. How do we bring the same level of simplicity and trust and utility to for example, a remittance transaction? So we see that we have a clear right to play. We can add value in setting the standards in multiple jurisdictions about what the compliance is, how the consumer identity is done by various players, what is the level of standards that you can come to trust. So CryptoCred, as an example, is you can go to many jurisdictions just with a simple of email and mobile address, and the underlying complexity behind what networks, what asset is supported, what is the scoring behind it, is it the right destination, are you going to lose your asset? All of that get encapsulated into one simple service. Can you reach the person with a mobile number and send? Some of them, we'll talk about this, some of them actually want to receive the money on the other side, maybe in a bank account. Not everyone wants to start and end in this, and that kind of simplicity need to come. Otherwise, the industry is talking to industry, but it need to be driven by what the consumers and businesses want, and what they want is a simple experience, right?
Music to my ears as someone that had a Bitcoin paper wallet back in the day, that there's a focus on UX. So, Jono, how about you?
So, if you're trying to serve the on-chain community, who I think is the early adopter of what the new rails that will end up driving industry over time, and it'll take a long time to re-platform financial services, but that on-chain community requires that simplicity, the efficiency, and the stablecoin moves extraordinarily well. And it ties in with trying to help bring the rest of financial services onto chain. So, we on little things that we're trying to do. So first, tokenization. We believe that this will be the wrapper of the future on the blockchain. You'll be able to do things even more efficiently than in the exchange-traded fund wrapper, which has been very, very successful over the last 30 years. We've taken one of our exposures, our money market fund, and tied it to the debit card, and it's showing a real-world banking alternative, and it is a highly competitive user experience. And again, this will be driven by that user experience. So we're just trying to work our way through all the regulatory issues to be able to, launch this on a global scale, but focused primarily at the beginning in the U.S. market. We thought that if you could tackle the regulation of this market, it would serve you well on a going forward basis. I hope that proves to be the right decision. I wish I could have invested in Tether, in that, they seem to have found a wonderful way to build a business. So, but we're trying.
Yeah, and Maz, you want to talk about stablecoins?
Let me give you the fintech view that deals with retail customers. We listen to everything our customers say, and we try to offer them whatever is safe and compliant for them and adds value to their lives. So we listed stablecoins on our platform about 2 years ago, and the first thing we realized is our users want to have multi-chain access. So what we did is, rather than just limit them to one blockchain network for a single stablecoin, we wanted to give them multiple blockchain networks for all the stablecoins on our platform. So for example, on USDC, we integrated with Ethereum, Polygon, Solana, and Arbitrum. On USDT, another example, we integrated also with Ethereum, Solana, Polygon, and Tron. And that gives our users more flexibility in how they use the stablecoin once they send it on-chain to some external wallet, DeFi platform, or another friend or business that they want to send it to. The second thing we did is we do not want our users to lose value. And this is a critical point which I'm not sure how many players in the industry are paying attention to. If I convert $1 into one stablecoin, I do not want to receive 99 cents when I make that conversion. I want to receive $1. And what we did is we offered all our users a one-to-one conversion between stablecoins and more than 30 fiat currencies, including dollars, GBP, euros, JPY, and many more. And that helps our users maintain value, and it enables more trust between the company and our customer base. There is one more product I want to get to, but we'll save that for later, because that ties into the day-to-day increase of utility for the average person, which I think is what most people care about.
Cool. Well, I love the thrust on UX. That's very new to the crypto industry, and thanks to all the fintech folks for coming in and actually having that focus for us. Let's move on quickly to challenges or impediments to adoption. Obviously, where you guys all sit, highly regulated industries. What are some of the things that have gotten in the way of wanting to go as fast or just to be able to adopt stablecoins? Maybe, Jonathan, why don't we start with you, because you serve literally everybody in the space.
Yeah, I would say that there is a number of barriers depending on what you're trying to do in the space. And so on the issuer side, now there are 200 issuers of USD stablecoins out there in the marketplace. And I would say that when you look at sort of the bigger institutions and them thinking about issuing, or you think about like the larger retailers, they have some steps to think about what it means to have an asset that you issue go and circulate in the wild. And so what the regulation and subsequent guidance and actual rules on the books are going to mean is that actually that becomes a lot clearer. And today you see, the likes of Tether, they use, chain analysis to monitor really the entire ecosystem and look proactively for, threats across their assets that are circulating in the wild. And you'll see that will be something that will get more and more standardized as, understanding what are the risks about being an issuer in that context. And the rules of that road haven't fully been defined yet. And so that's been very difficult for the larger institutions to fully go in and issue stablecoins at scale. If you think about sort of the people that are transacting or receiving, the burden is much, much, much smaller. There is still, rules like the travel rule, and there's AML obligations as well. But we find that most of the players in sort of more of a payments context can get pretty comfortable in using stablecoins to transmit value across borders or for retail transactions. And really, like we're seeing just like an uptick of that across the people that we serve. And then I think the barrier is like the individual consumer level, to Mazen's point, someone doesn't want to know, like, oh my God, I've got it on this network. I don't know how to move it from Polygon to Solana. Like, someone's asking for it on another network. Yeah, a lot of that UX is like still a barrier to entry for the seamless experience. And so it's going to take fintech players to come in and actually solve some of those barriers and abstract that complexity. No one needs to know really like what stablecoin, what network. It just needs to work.
What about like, so this was a couple years back, but when SVB collapsed, there was USDC lost its peg to the dollar when redemptions were halted, and in DeFi, I think it went down to like 87 cents or something.
Yeah.
Like,
that's a risk. That's definitely a risk. And I would say today, one of the things that I think a lot about in this like super interconnected stablecoin world is that, just because like you think you've got great banking infrastructure to back your stablecoin doesn't mean that your stablecoin can't lose its peg because some other stablecoin actually has some liquidity issues. So, in that weekend, and I remember it very, very clearly as someone who was maybe at the time had money in SVB. But the thing about that was that actually, everyone was looking to see whether Tether would lose its peg. And that's a good question. So one of the things that we think about at Chainalysis is we track all of these different assets, and we track the interdependencies and all the contracts and all the pools that all of these different stablecoins are in. And actually, the question that a lot of our clients are asking for us at the moment is, what does the USD on-chain risk look like from a stability point of view? And how do I set up monitors to understand that across the entire ecosystem, not just my pool, my contract, my protocol? Like, how do I assess that risk? And again, early stages of figuring that piece out.
amazing.
Yeah, look, very briefly, I agree with many of your points just made in terms of the trust and interoperability at one point. I think at the end of the day, this is not about really, okay, can we get stable coins more into a use case? That's not the point. I think the point is, can we offer an end-to-end utility and where the demand is? One of the biggest things that we see that we can play this connective tissue layer is between the stable coins and fiat world. Every one of the use cases end-to-end, if you look at it, it involves a combination. Just last week, we announced a partnership with MoonPay, where the use case is if somebody could send stable coins to anywhere in the world. It's held in a wallet, and there are cards attached to that wallet for you to spend anywhere. And that gives everyday utility. From that consumer perspective, they can receive money from anywhere, and that is accessible everywhere they go to. That kind of end-to-end utility is what we need to solve for. And all the complexity with multiple stable coins, networks, and all of that need to be abstracted away, right? So that's another use case where it comes. So what is the barrier? The barrier is really abstracting this away, putting that end-to-end experience and serving it up. And so what Revolut is doing is great as well, because you're pulling that together and simplifying and giving a consumer experience.
I can actually give an example about abstracting complexity.
Sure.
From the
Yeah,
users.
interoperability is a great theme.
Beyond interoperability. So we launched a product about a year ago called Crypto Cards. This ties into stablecoin usage as well. What Crypto Cards is, basically, it's no different than your debit card or credit card that you have in your wallet today. So when you go to a store, you tap pay or use Apple Pay, it settles with the merchant gets the money they need, and your bank account gets deducted, or your credit card bill goes up by a certain amount. What we're doing here is exactly the same thing, but with your crypto balance. So we have a virtual card or a physical crypto card, and what it does is it looks into your crypto account, regardless of what asset classes you have. It can be Bitcoin, ETH, stablecoins, or any other crypto. And what it does is it deducts it from your balance. We convert it on the back end on our trading platform back into fiat, and then we settle that fiat using existing fiat rails with the merchant. As the user, you see nothing. The merchant also sees nothing. As a user, your credit was reduced, or your asset balance was reduced, and on the merchant side, they're going to get their money sorted the same way. This is how you abstract complexity, and you give users a day-to-day, real-life use case on how to use their crypto beyond just speculation and hoping some coin goes to the moon.
Great.
That's exactly right. So he
Yeah.
very good job explaining that experience.
You're welcome.
Yeah, wonderful.
Well, shifting gears slightly, we're going to gloss over required features and innovation to go to the business impact and the actual business model. So what is the long-term business model for stablecoins? And maybe, Jono, I'll kick that off with you.
I mean, stablecoins is just one use case, and it's certainly a Trojan horse. It's certainly something that's penetrating the marketplace, but it has, only one element of getting traditional assets sitting next to the crypto assets, trying to get them next to your traditional banking services and getting it done seamlessly. So we're trying to do the same, where you can keep your money market fund tied to your debit card, but if you'd rather it be in Bitcoin or gold, it can also be that as well, all physically backed. Trying to get to things like the instantaneous settlement of all assets in real time. Those are the issues that, I think will drive the consumer experience, that will make it all a reason to come on chain. And so I'm immensely optimistic that the journey will happen. In the short run, to the last question, it's still very frustrating on a regulatory standpoint. And to do this for us, for scale, we're really trying to figure out how can you onboard the world. And the world the US, we have such a developed financial system, but how do you offer gold or crypto or a money market fund in Nigeria or someplace where they don't have the banking service? And will the US regulator punish you for trying to do something helping people who might not have a social security number? What kind of identity? What does it take to know who your customer is in a real world scenario? And that sort of, interoperability is, table stakes, that you don't break a dollar, you keep everything is physically backed. I mean, those are just table stakes that financial services. But what's so interesting about the blockchain, it is truly global. How do you get that to really work in a regulated world? And I'd love the answer from my panelists.
I think, John, the thing about it is that it's just happening. So there are 350 million wallets around the world, which is more than the number of US citizens holding US dollars. So and not all of them are identified with KYC and social security numbers. And I think that essentially, if the product is good enough, if the demand from consumers is high enough, the product just goes in that direction. And then the regulator needs to figure out, okay, what are the unique attributes of this technology that actually means that we can get as comfortable and we can be as effective in preventing illicit activity from happening? And what are the ways in which there are some attributes that actually mean that it's better for that apparatus to achieve their mission? So seeing the ability to freeze assets without sending a MLAT across the world that takes 9 months to go to a bank in Southeast Asia to try and freeze money that left the bank 9 months prior, that's something that is completely different in a world of stablecoins, where you've got stablecoins that are regulated in the United States. Being able to track transactions that happened 10 years ago when banks don't keep records for that long, is something that like is an incredible attribute to law enforcement and the regulatory apparatus that then you start to trade off like, oh, do we need as much upfront information collection, or can we get that later on down the line when we have suspicion? And so the thing that I think we're seeing is that the product is so good. It's got an incredible organic adoption, and you've got regulators and law enforcement getting comfortable around the world that, hey, with the right tools, we can be as effective as we were in the traditional banking sector.
But we're envious of your role because you're working with law enforcement and the regulator, and you're the fintech, but we're the regulated financial services, and they don't blame you, they blame us. And so,
Stop pointing at me.
Really, it's.
They sometimes blame me.
It's a tool required to do. Look, one of the other things, and just taking this in a slightly, stablecoin long-term business model, obviously it need to get to the use cases level beyond trading, and this high interest rates are not going to always be there. So getting to the utility aspect of it sooner rather than later, that'll help. One of the key aspects that we would love to see is today, as I was talking about, many of our use cases involve one leg stable and one leg in fiat. That's not well mature market right now, right? So it's FX markets in the currency world are really deep and functioning really well, efficient, and we ourselves are settling these rates for our card network, for example, as far as our cross-border business. Love to kind of see this problem solved here. Otherwise, what we are doing is one leg is stablecoin, and you have to get to a fiat, get back to US dollar, and go to classic transaction. Really not solving the problem. You're not going to see the entire world want to operate in a stable world. So that's something that need to be solved if this need to scale for everyday use cases as well. And you would see us providing some answers, but we would also need to see the market evolving there. Yeah.
I like this concept of stablecoins kind of being like the top of funnel for entry into the crypto space, but I'm curious if you guys are seeing it the other way, where people are coming in to adopt stablecoins for stablecoin's sake.
I think there are emerging markets where people want to have an account based on a US dollar-based stablecoin. You would see many of the fintechs offer that. Today, the exchanges offer, crypto exchanges already offer, but you would see a lot of fintechs wanting to offer this as well. In markets where that is legitimate to do so, there is the local government need to agree to that, because in some ways it's dollarization of that economy. But yeah, you would see that as a stored value product that is emerging. And the clarity on regulations on whether they can offer interest to consumers because they would be interested, or it could be a product where people in certain markets prefer a US dollar exposure, and this becomes a way to get exposed. So that is you would see that as an emerging use case as well.
What about stablecoins versus bank deposits? What's a better product for the consumer?
Look, we operate on both, right? So we have a product called Multi-Token Network, where it allows actually bank deposits to directly engage in use cases on chain. So we're working with a number of partners, JPM, Ondo, and et cetera. I think that would continue to be an emerging use case. You would see many, just let's do a quick comparison, right? So just 200 billion or so, I don't know what today's number in total stablecoin market caps are, but the deposits are about 16 trillion in US dollars alone. So it's not going anywhere. It's going to continue to drive the fractional reserve model in the banks. And so they're going to continue, a lot of the corporates will continue to maintain as deposits. They'll begin as deposits, end as deposits. So maybe stablecoin is there and somewhere in the middle in terms of efficient money movement, but that need to happen. Many of the panels talked about many consumers, corporates don't want to, they have let's say you're really interested in a WisdomTree product that's on chain and they want to buy, the corporate treasurer who's looking to do that, they're more interested in getting the returns. They're not really thinking about the mechanics of how to move the money in and out. So how do you start with your bank money and end with money when the returns come back from that asset is important. and that's what we try to offer. So I don't believe this is a one kind of money format that fits all use cases. Deposits are not going anywhere, right? That model is well tested.
Give you a short answer.
Yeah? Thank you.
We hold tens of billions of dollars of our customers' assets. I can tell you the absolute majority of it is in fiat. A tiny, tiny fraction is in stablecoins, but that tiny fraction is growing slowly. And that's the part that matters. So it's not the size of it today, it's the growth rate that we're observing. And that's what gives me evidence that this space is growing and has a bright future.
Also, now, I mean, I think there is the dollar, and the world has demand for the dollar. There's no question about it. And dollars are showing, certainly stable coins are offering rewards, so you're getting some interest on it. But that's not the most ideal way, but still competitive with banks that, for the most part, give you the least amount of interest they can get away with as they take your money. We're very excited about having a different stable coin, the money market fund, the 40 Act that's been tokenized, where all of the interest has to be paid out by law other than the expense ratio, and that is very competitive to a banking experience. I think there's no question that the banks face a very uncertain future. They are centuries old, some of these institutions. The legacy issues of their infrastructure is a burden. It's not an advantage, and I expect that you will see a better user experience taking money from the traditional banking system. In fact, for the large banks, how they deal with this new platform, blockchain, may be their single most important issue. And as a highly regulated but not regulated as much as a bank, I feel we have an advantage in some ways. A bank is a burden in many ways, very stifling.
For sure. I mean, and also just going back to your point about like kind of feature set, programmable checking account plus programmable savings account is just features that the old school versions of those products don't have.
Right, and the old rails will never be able to do it. And so then if you're someone who's been around for centuries, you'll have to run two separate systems and spend a lot of time trying to connect one to the other. Not so easy to do. So I think that it is an exciting new world. A lot of this is definition, though. You know, digital assets, crypto, stablecoin, blockchain, smart. I mean, we're throwing terms around very, very quickly. And I think in many cases, it confuses people. There's no standardized vocabulary. So, you know, it is not so easy to navigate. And for the consumer, I think it's hard. But for the institutions, it's very hard as well.
Yeah, I mean, 5 years back or so, we would have just called stablecoins banking as a service, and we wouldn't have been talking about USDC and Tether and the like. Moving on to sort of like outlook in the future, and John, I'll start with you because you said something interesting as you were talking about sort of like the feature set and stablecoins being kind of like your red pill moment for other products. Where do you see this going? And maybe let's give it maybe a 5-year time horizon. Like, where do stablecoins play, and what are the next things that kind of happen that stablecoins are enabling?
So I don't look at it as like stablecoins as per se, pure stablecoins. For me, it's digital assets. And within digital assets, you have your crypto, you have your stablecoin, which is a tokenized real-world asset, the dollar, or a money market fund, or something else. And for me, it's really about utilizing the blockchain to get the efficiency that the old world cannot do. And I just think that what I'm getting optimism from my panelists that I haven't gone on a crazy, dumb journey, and that there is something at the end of, you know, the rainbow here. And for the consumer, I do believe that that is the case. But again, I still, you know, for me, that 5 years, this is a very critical 5 years from a regulatory standpoint to really see how they allow us to serve the world community.
Yeah, and as an industry, we got to not get over our skis and blow ourselves up like we do every 4 years or so. So, what about, are there multiple winners in payment options? So are stablecoins kind of like one of many? And maybe, Jonathan, I'll throw that to you.
Yeah, I think that just to go back a little bit to the 5-year question, which I think is a great one, is
Sure.
Look, I think that at the end of the day, there has to be, we have to be in several $1 trillion of outstanding value on stablecoin networks. That unlock happens if, we get to a position where we have solid rules on the books in America that, the big corporates and the big banks are, able to play. And that can fuel like a lot of different use cases that like John is interested in, or Mazen's interested in, or Raj facilitates on the network. So like that can become like a massive piece of financial plumbing for the world. I think that like the optimistic view is that you can see a world in which this ecosystem generates more payments than even exist today. Like I think that stablecoins fail if it replaces ACH and Fedwire. Like stablecoins succeed if new business models on the internet are unblocked, if new types of payments that otherwise couldn't happen are unblocked. And I think that scalability of different blockchain technology is going to get to a point where the marginal cost of putting it in the infrastructure is close to zero. And so like you could have a lot more of these use cases pop up. And so that would drive, even if we get to say 3 trillion or 5 trillion in outstanding value, like a much, much bigger contribution to the global economy. So that's kind of the optimistic view that I'll be sitting here in 4 years' time being like, we didn't get all the way there, but we'll get at least some of the way there.
Yeah, so like agentic payments, things we haven't thought up, like.
Yeah, I mean, I think, Ben Thompson, who writes a newsletter called Stratechery, it's excellent. He's been a deep crypto skeptic for a number of different years, and like recently he's come around to the idea that like the internet, where humans are not actually browsing websites and actually looking at content and being served ads, we need to actually move to a situation where agents are paying other agents for content production or consumption, and I believe in sort of Visa and MasterCard's ability to tokenize everything, but I think stablecoins definitely fits into that vision.
I can't wait for the agent to actually ping me and say, hey, can I pay you to do this thing in the real world that I'm not able to do?
Yeah.
Yeah. Any closing thoughts on this topic before I reserve a bit of time for you to make an announcement? Raj?
Nope. I think he made the point. It's just, end of the day, it's where this goes is really depends on how well at the core of it, stablecoin is just a money movement stack, if you will, programmable, more flexible, but the value accrues to, I think, overlay layers and who actually facilitates use cases in a safe way. I think that's where it goes. More successful people orchestrate end-to-end experiences, and that's where that I think is where it's going.
Amazing. Maz, future outlook to you,
and then announcement.
Yeah, and then we want to hear what you've got to say.
This is my crystal ball. I have no idea what's going to happen in 5 years. I agree with a lot of what you said. A few trillion. The use cases, I'd say pay attention to remittance, pay attention to emerging markets. But I don't know the future, so I'll leave it at that. Announcement, yes. So we had to adapt to the uncertain regulatory environment a few years ago in the US, and as a result, we turned off our crypto service to our US customers. I am happy to announce that Revolut will be relaunching its crypto products and services in the US market very, very soon, so stay tuned.
Awesome. Woo! Congratulations. That's amazing. Well, we are literally down to a minute worth of time.
Well, that's a great sign, meaning someone who has so many customers, highly regulated, you can now come back into the United States without risking the whole firm. So, and I believe that this administration, that was what they were trying to do, but it's nice to see it happening from, I mean, we're also risking it by touching crypto, but it's nice to see more and more come in.
Yeah, it's a great point. I mean, a lot of crypto folks left for various reasons and launch projects, maybe permissionlessly or what have you, and very few folks over the last, I would say, 5 years leaned into US regulations. So yeah, echo that sentiment, Jono. I mean, building Tradable, we tried to lean in and it was tough. We had people that were building faster offshore. So psyched to have you guys back, man. Jono, Maz, Raj, Jonathan, thank you so much. Thank you guys.
Thank
Thank
you.
you.
Thanks so much.